Let's get started. My name is Ryan Tolson. I lead the commercial team at Esgian Offshore Wind. First and foremost, thank you all for attending. For those of you that do not know who Esgian is, we're headquartered in Oslo, Norway, and we are a market intelligence and data analysis firm for the ocean industries. We operate in three primary segments. That's rigs, shipping, and offshore wind. My focus being 100% offshore wind, and today we obviously speak on offshore wind. Each month we'll host a short webinar that covers a current and relevant offshore wind topic. We keep these to 19 minutes. We do that on purpose. We understand time is precious, and we want to provide you with quality information in a very short period of time. Though, if you haven't already, I do encourage you to follow Esgian Offshore Wind on LinkedIn, sign up for our newsletters to be kept up to date on all future events, news, and our quarterly reports. But for those of you that do not know, we offer a subscription-based digital platform that provides transparency and clarity into the global offshore wind market. We actually just released our new platform, which we're very excited about. Our clients are developers, companies within the supply chain, vessel companies, consultancies, and more. And we're primarily helping them with business development, where are the future opportunities, and competitive and strategic analysis. But today's discussion tends to be a favorite. It's our quarterly update. And during this past quarter, we've seen record volumes awarded in auctions across the world. That's from Australia and Japan to the Netherlands and Germany. The long-term outlook appears strong in terms of volumes available, but at what price? In the shorter term, are we finally seeing new contract orders picking up and installation programs coming together? We'll dive into all of this in the coming 19 minutes. But the best part, in my opinion, is that all the information that we're discussing today has been sourced from our Wind Analytics digital platform. We've got Oliver Stevenson joining me today. He leads our offshore wind team. And with that being said, take it away, Oliver.
Thanks very much, Ryan. Nice to see everyone on the call. The intention today is to take a little bit of a step back, offer some reflections on what we've seen over the last 3 months or so for the second quarter of the year. And we'll also hint a little bit of what we're expecting to come in the months ahead. So the usual sort of content that we have on these quarterly updates, there'll be 5 different slides running through 5 of the main themes that we're looking at in the market at the moment. So let's start with the key message. And the key message for this webinar today is that we're really seeing the two-speed nature of the offshore wind market come to the fore. And that really was the focus of what we saw in the second quarter of 2024. So to provide a little bit of context here, in April, in the previous webinar, the Q1 webinar for the quarterly updates, in April, we highlighted that there was a market correction underway and we had a pretty positive outlook for the full year 2024. And this positive outlook certainly came to fruition in the last 3 months with regards to leasing processes. The volumes that were awarded were beyond the expectations that we originally set out before the quarter began. Significant new projects were awarded both in more traditional markets like Netherlands and Germany, but also in new countries such as Australia. And we'll come back to Australia in a minute. But importantly for us as well, companies also were pushing into new markets. In particular here, we highlight the floating awards that we saw in France and in Japan. However, the slowness in new contract awards that we noted in the first quarter persisted into the second quarter of the year. The net result of that is that we now have increased confidence that projects will contribute to power production in the longer term. There are a lot of projects out there. But on the other hand, shorter term concerns are now very clear, and 2030 government targets look increasingly out of reach. If we turn to the strength of the results from the leasing processes that we've seen around the world in the second quarter of the year, it's clear when we look at the chart we're showing here that there's been real progress. The total pipeline of projects is now up to a very substantial 660 gigawatts. And this is an all-time high that we reached in Q2. This demonstrates continued strong commitment from stakeholders across the industry. New lease area awards saw the largest growth in gigawatts on a quarter-on-quarter basis, with significant new areas allocated, particularly in offshore Australia. As important as that absolute number of 660 gigawatts would also point here to the seemingly relentless and certainly continued growth that we've seen in 2020 since the start of 2023. You can really see that regular increase in the pipeline every quarter that we're tracking here on the chart. 3 months ago in our webinar in April, we asked where were the contracts? And by and large, we're still asking the same question. Contract awards remain slow in the second quarter of 2024, particularly for equipment. Slow does not mean there were none, though, and there were a few notable contract awards that we'd point to. Vestas continued to take market share, clinching the award for 112 turbines for the Nordlicht 1 and 2 projects in Germany. And Vestas also in Germany confirmed its provisional contract for the North Sea Cluster A. Also coming from Germany, we had news from Siemens Gamesa on the size of the turbines that were being increased for Skyborn's Gennaker project. Those turbines now being confirmed as 14 megawatt turbine units. So some reasonable news coming through from the turbine OEMs, but in other market segments, awards were only handed out for a couple of projects. We saw contracts for cables and infrastructure for Princess Elizabeth Energy Island in Belgium, and some jacket awards for Fengmiao in Taiwan that were split between 2 fabricators. Overall here, though, the message is that the data was pretty weak for equipment contract awards, regardless of the component segment that you're looking at. Despite this weakness, our overall sense is that contract activity will pick up in the second half of this year. And validating this trend, the first few days, first few weeks of this quarter, this month, has already seen some pretty significant contract awards. As a reminder to all of those of you who are our subscribers, full details on all the contract awards and contract details are available on the Wind Analytics platform. So we now turn to what we're seeing in the vessel market, looking at contracts and activity here for installation vessels. Starting with the European market, port activity in the second quarter was high. This is largely expected due to the normal seasonal upswing that we see as weather improves in the Northern Hemisphere. We saw several projects beginning foundation and beginning turbine installation. Here we're looking at He Dreicht, Sophia, Dogger Bank B, Calvados, Dieppe, Ile-de-Dieu in France, all of which began foundation installation in the Q2. We saw turbine installation getting underway for Goodwin 3 and Borkum Riffgrund 3 in Germany. Goodwin 3 actually is already completed. What does this translate to in terms of port activities? Well, many ports are working at full capacity at the moment. We see Eemshaven particularly busy handling both foundation and turbine installation for the 2 projects in Germany, Goodwin 3 and Borkum Riffgrund 3, as well as the foundation installation for He Dreicht. So certain ports really pretty busy in Q2 from a European perspective. We look at the US market achieved a significant milestone as several large-scale projects were undergoing installation. And here we really pull out the fact that they're undergoing installation at the same time. That quarter, we had both Revolution and Coastal Virginia beginning foundation installation. Revolution using State Pier in New London, Connecticut, as the location to marshal the foundations, which are then barged out to the project site. And as we discussed in June's webinar just last month, for Coastal Virginia, we've seen this unusual approach that's being used where DEME's Orion vessel is using Portsmouth Marine Terminal for marshalling, despite it being a US project. What do we mean by despite it being a US project? Well, Orion clearly not built in the US, which theoretically under the Jones Act could have prevented the vessel from using a US port. And as we mentioned in June, the Jones Act does not regulate a vessel moving from a US port to an offshore location where no pre-work has actually been done as yet. This has enabled Orion to use that US port and significantly improve the offshore installation efficiency of that project. Talking of which, Vineyard 1 clearly behind schedule, but worth noting that offshore installation rates there have picked up speed quite noticeably through that quarter. And just doing a quick regional run around there, if we finish up in APAC, port activity in Asia has been pretty moderate, to be honest. There are a few projects that are undergoing offshore installation in Q2. Taiwan really the busiest. Here we're looking at Taichung and Kaohsiung in Taiwan as the two busiest ports. And then if we look a little further ahead, vessel contracts continue to trickle in during the second quarter, certainly outpacing the first quarter of the year and reaching, we have got 14 contracts in Q2 in our database. The majority here linking into German projects, Windanker and the North Sea cluster, but also Baltic 2 and 3 in Poland, and also Fengmiao in Taiwan. So not just the equipment contracts for those projects, but we also saw the vessel contracts coming through as well for those particular projects. So I would say arguably a slightly more positive picture if we make that comparison between the vessel contract market and the equipment contract market. The equipment contracts noticeably slower than the vessel contracts. So we turn now to what are we seeing in terms of the supply side, in particular for equipment and factories and expansion projects. The regular trickle that we've seen of new factory announcements and capacity expansion has continued. The net consequence of this is steady news flow, overall capacity gradually edging up to help meet future demand expectations. Announcements in Q2 were almost exclusively focused on new capacity build out in Europe. Interestingly as well, a lot of focus on new build facilities rather than expansions in Q2. But certainly the trend for us is not a huge jump up in capacity and expansion, but more a regular gradual expansion of what we see of capacity build out announcements. Just picking out three of the more interesting developments on this chart, and again, give it a plug, but on the new platform, you can see all of this in a lot more detail around the factory build out and the capacity build out. Just pulling out three of the more interesting developments. If we start here with Dragados, which announced plans to open a new yard in the south of Spain in Algeciras. And that new yard will be exclusively focusing on HVDC substations. And really within that, trying to build out their 2 gigawatt product offering for the HVDC market, building on the contracts that they've already been awarded, the success that they've already had at Dragados in that particular niche of the market. Most of those, all of those are currently being built, will be built elsewhere in southern Spain and Puerto Real near Cadiz. So quite close, but a slightly different location for this new facility that was announced. We then switch up to more northern parts of Europe, and in Scotland, Vestas submitted a planning application for a new facility in Leith in Scotland that will be manufacturing blades. Important to stress here for the Vestas facility that no investment decision has been taken on that project yet. It is still very early stages and just the initial planning permission, planning application that's been submitted. Leith is one of the UK's free ports, suggesting that there's potentially significant tax breaks that will be on offer there to incentivise investment. And that would be the first blade facility in Scotland if it were to go ahead. Although there are a couple in England, that would be the first in Scotland. And switching over then to Germany, a Chinese company here called Titan confirmed an investment that's potentially worth up to 300 million euros on a new monopile factory in Germany, in Cuxhaven. And they're calling it XXXL, so a bit of size inflation going on there, but it will be for very large monopiles. The new facility is expected to begin production as early as 2025. Construction only starting a little bit later this year. So I would expect a ramp up in that production rather than to hit full capacity immediately. The expected full production capacity of that new facility will be 500,000 tons a year. So it's pretty significant in size. Worth noting here, Chinese companies setting up a facility in Europe, something that we watch closely and report on regularly. And when we hear news of that, particularly given the backdrop and the outrage from some quarters around the contract award to Mingyang of a turbine contract. So here we're seeing a Chinese manufacturer, albeit for monopiles, expanding their presence in Europe. I choose my words quite carefully there. They're expanding their presence. Titan originally purchased a facility in Cuxhaven that had previously been owned by Anbau. So in essence, this is an expansion of a facility that they already have and already have that position in the European manufacturing market. Okay, last but not least, point number 5. We started talking in today's webinar by beginning with the enormous volume of lease awards that we'd seen in the second quarter. And I want to take a closer look at some of the details here. It really was the most significant news that we had across all sections that we cover in Esgian Offshore Wind. And it was very, very clear that lease awards were most prevalent in Australia. Australia absolutely dominated the total numbers here. So Australia accounted for 27 gigawatts of the just over 37 gigawatts that were awarded in Q2. So Australia accounted for 27 out of 37 gigawatts. 27 gigawatts is a huge number. However, geographically, those new lease awards were also spread pretty widely. We did see new large projects awarded in the Netherlands and in Germany. And I also mentioned that we'd seen floating projects gaining what we feel is much needed traction in the leasing processes, which concluded in France, which we think is going to be 250, maybe 270 megawatts. But also a couple of small demonstration projects in Japan that, although are very small, potentially open up a very substantial market in East Asia. If we then switch to look at what we think this means for the second half of the year, yes, the first half was extremely busy. Q2 blew all expectations out of the water. But we think the second half will be extremely busy as well in terms of leasing processes coming to a conclusion. Attention is now turning to the US. We've got 6.3 gigawatts potentially available in the Central Atlantic processes, and in Germany, where we could see as much as 6.6, a further 6.6 gigawatts, in addition to the acreage that we saw earlier in Q2 being awarded. So substantial volumes still to be awarded in Western Europe in those two more traditional developed markets. So the headlines look very positive, huge amounts of volumes being made available, huge amount of volumes being won. However, it's worth stressing it's not all good news in terms of lease rounds. The Taiwan process still ongoing as we went through Q2. As we get into the beginning of Q3, we got a bit more clarity this week. Again, I stress the words there, a bit more clarity, still not completely clear. Because there's a further wait as we sort out some overlapping project areas before we really understand exactly who has been successful in Taiwan and on what basis. A lot of concern in Taiwan around the relatively unfavorable terms that are on offer in comparison with other jurisdictions. In Europe, we've clearly seen the Dutch authorities signaling that they will respond to calls from developers for better terms in their next lease rounds. And in Latin America, Colombia is experiencing delays as they try and iron out terms for their first lease round process and what would arguably be the first lease round process to come to a conclusion in Latin America. So it's not all clear sailing. Problems in some jurisdictions. It's certainly becoming much more competitive. We will discuss a lot of these issues around leasing processes, leasing auctions, what to expect, where to expect it in next month's webinar, in the August webinar. That's going to be the subject that we cover there. So if you're interested in that, I'd highly recommend us as we do joining us for that as we do a deeper dive into lease rounds next month. But let's draw things to a close for this month's webinar. The quarter for us, if I return to this theme, really highlights the two-speed reality that we're seeing in offshore wind. Equipment contract awards certainly leading to shorter-term uncertainty, while the longer-term picture suggests very high future levels of activity as projects convert, as auctions convert to projects, although that can certainly be a very slow process. But one thing's for sure, one thing to take away is that even if large volumes of potential future capacity continue to be awarded, the most important thing is that this capacity has to be built, and to be built, we need to see more contract awards. So let me leave it there in terms of the presentation and see if there are any questions that have come through. I should have said there is always a way to ask questions as we go through these presentations, so please feel free to put anything into the Q&A section, and also you can contact us directly as well if you prefer.
Excellent. Thanks, Oliver. Just over 19 minutes. But as Oliver just alluded to, if you do have questions, please type them into the Q&A section at the top. But as we're waiting for some questions to come through, there's a few things I'd like to touch on. First and foremost, our quarterly report has just been published. So this is the quarterly webinar, which has been taken from the quarterly report. Our clients will receive the full version, and all others will receive the executive version. If you have not received the quarterly report and would like a copy, please send me an email directly. And Oliver, if you go to the next page, you'll have my contact information on the presentation. Also, as always, as I mentioned in the beginning, for those that haven't, I encourage you to register for our newsletter and follow us on LinkedIn. I did mention this in the beginning, very, very briefly. We do have a new and enhanced interface to the Wind Analytics platform with a very impressive, in my opinion, interactive mapping feature. We've put a lot of time and effort into this. It's just been published. If you would like a demonstration of the database, or if you're a client and have questions, we're more than happy to have one-on-one meetings and take you through the platform to show you what it's all about. So again, please reach out to me directly for that. We will be at, or go ahead, Oliver.
I was just saying, I can see that there's one question. I think it's, given the nature of the question, it's probably a bit easier to pick that one up offline.
Is that the EPCI one?
Yeah.
Gotcha.
I think we can give a bit more detail if we take that offline and really get into the nuts and bolts of it. Perfect.
So that is from Dylan. Dylan, we will reach out to you directly to touch on EPCI contracts. Towards the end of August, we will be at ONS. So that is in Stavanger in the south of Norway. If anyone is there and would like to meet, please reach out. Always like to say hi. Also, we are planning or starting to plan our trip to Hamburg for wind energy at the end of September. Again, we would love to meet you in person there. And with that being said, I am seeing if there's any other questions that have come through. There haven't. But as Oliver alluded to at the end of his presentation, next month's webinar will be on future lease rounds. So we look forward to diving a little bit deeper on that. And hopefully everyone found today's webinar beneficial. And we'll see you on next month's webinar on lease rounds. Thank you very much and have a great day.
Thanks, everyone. Bye.